QCEW. Look it up. I did some research there. Pretty interesting to hear, the birth-death ratio and the modeling that goes into jobs reports. We know the trend is for jobs to be lost. And remember, those 818,000 jobs were rebalanced last year. And that's a lot of jobs, expanding our money supply because the Fed has been restrictive. I'm going to explain that.
Credit card loans, car loans, those are short-term borrowing rates, and they are low right now.
Microsoft and Google came out and said, we're not going to reduce our billions of dollars of spending. Existing home sales, 4 million home sales annual rate. That's with a little drop.
Hey, it's KP coming to you live from Corona, California.
Listen to one of my favorite country songs of all time there, David Onco, You Never Call Me By My Name. But don't worry about me. Let's talk about the K-shaped economy and what that means. And if you've never heard that before, K, right? You got a K. You got half the economy, actually a really small portion of the economy going up and a lot of it going down. So we are seeing a bifurcation, a split in this economy. And it has been a tale of two economies for a long time. So we know that the top, something like 10% of wealth in America is holding up like 50% of the GDP. Maybe that number is 20, I don't know. But it's a small portion that's doing a lot. And when rates stay higher for longer, like the Fed has said and has done, they haven't cut since December, it puts a lot of pressure. And the words they use in their press conferences, highly restrictive, and it is. It is a highly restrictive federal funds rate. Interest rates for car loans are pretty anemic, although we're going to get Manheim used auto information out this week. We'll get retail sales out this week. We know it's high for credit cards. Shout out to Mesa, the first credit card to give reward points for paying your mortgage. And we also know, student loan debt is high, and now that's counted on your credit, and people are getting billed on their tax returns. So this K-shaped economy has not quit, but it just makes our mission in the housing industry that much more important because people who have nested equity, who have an asset that appreciates over time in the long term, paying down their debt with their mortgage payment, while it also goes up in appreciation at a static, typically fixed payment that stays at a certain level. And of course, if the trend is for lower rates over time, even ARMs can get refinanced. So I will say, like I said online, they have the dating the rate has been a good strategy. There's been $400 billion in there's going to be $400 billion in refinances this year. So a lot of dates getting dumped. So you may not feel it at your lender, but there's a lot of people that are putting out competitive rates. And it's interesting. I saw a great video from Barry Habib and the MBS Highway team today that kind of explained that a lot of times we saw this dip in rates. It was very short-lived, and so people had to be quick. You had to use their rate alerts. They've got a great tool at MBS Highway, and there's lots of tools that we use, but you got to use it and be convincing and get on the phone and make dozens of phone calls in the moment and say, now's a good time to dump that date and get a new rate. So, whether you say that or not doesn't matter, but a lot of refinances are getting done. So, again, the housing mission to put people into a home, even if you help build their credit over time. We use CredEvolve here, and just get people in a buyer-ready position. FinLocker's fantastic. Social Coach for social outreach. There's so many different great tools out there that I could go into, but I'm not a billboard. I am not a billboard. But I will say that as we continue our mission, the second half of the year could be a surprise like the second half of last year. We saw rates dipping into the September Fed meeting when they cut for the first time for 50 basis points. And, of course, rates went up from there, but we were living off those locked pipelines for a couple months. And so even in a seasonal slowdown, we definitely saw an uptick in volume. And that could be the setup again for this year. So whether, tomorrow's CPI report in the morning, takes rates the other way, it's a pretty high bar to go across. Remember, the indexes that we look at this data are 12 monthly reads in a row. And the oldest one from a year ago is like a 0. Like it went up nothing. So if we go up 0.3 or 0.25 or 0.2 or whatever the number is tomorrow, it's going to bring the headline number up. And that's kind of expected. Will it be more than expected? And that would cause the bond market to sell off and rates to get worse potentially tomorrow. Huge lock day today here at our company, biggest lock day of the month for sure. And I know we're, all ships rise to the tide. So I know everyone was locking loans feverishly ahead of tomorrow's CPI report. But there's a lot of data that comes out, and earnings season starts. How are companies doing? How are businesses doing? The financials usually kick it off. I believe JP Morgan and Citi come out tomorrow in the morning, and then some of the other financial big box center banks will be reporting this week. And it's a good barometer in the health on the economy because they have insights on what's happening. Are people still spending? Are savings rates going up? Bank of America, which has some sort of banking with 1 in 2 Americans, they've been saying pretty consistently savings have gone up, spending has gone up, and they aren't seeing a humongous uptick in credit card defaults. So this data that comes out is super important. So, the stock market's at all-time highs. It's ripping. Bitcoin's at 124K. It's ripping. And I am not a financial advisor. I'm not responsible for your losses, only your profits. But $7 trillion on the sidelines in money market accounts and not really picking stocks. And so, I try and dispel all the political biases here and just tell it like it is and look at data. And that doesn't mean the stock market won't sell off tomorrow. If CPI comes in hot, bonds go up, that could happen. So I'm not saying put money to work tomorrow, but look at companies, look around you, look at what's working, and pick some winners for the long term and make some money. Buy a house, stop renting, help someone get into home ownership and build wealth so they can be part of this part of the K and not this part of the K. KP out on that little rant. Okay. Terrence won the Fields Medal Award. Now, you may not have heard of him, and I don't watch a lot of TV, but I saw a pretty cool couple clips from an interview by Lex Friedman, who's basically the Larry King of our era. If you haven't been watching him, I know Joe Rogan gets a lot of credit, and he does a fantastic job. Lex Friedman gets super deep in very intelligent conversation, and Terrence won the Fields Medal Award, which is only given every 4 years. It's a mathematics award. It's like a Nobel Peace Prize or Medal of Honor, if you will, for mathematicians. And he is a mathematician. It's interesting to hear him talk about quantum mechanics and math coming together. But there was something interesting he said in there. He quoted The Simpsons, and he said, I've done nothing. And he said, I've done nothing, and no, I've tried nothing, and I'm all out of ideas. I thought that was pretty interesting. So I know some of us, I see some struggles and some people online that feel a little helpless in this moment. But that's okay. If you haven't tried anything or haven't tried anything new and you're out of ideas, search through LinkedIn. There's some great content on here of people talking about things that are working, connecting with originators, getting on the front lines, working on different tactics and vendors that you can team up with. We just renewed with Total Expert for a year. We're pretty excited about that. I like where they're going with AI voice and agentic AI. We think that's going to be a huge win. Zactus is helping us navigate through all the craziness that's going on with credit scores and credit costs going up and the different tools that FICO offers, which is still the only platform that the GSEs have approved, even though there was a tweet from FHFA Director Bill Pulte that Vantage score is being encouraged. We don't know how to use it yet. We're waiting for guidance from FHFA and the GSEs, and of course the MBA is working very hard to push a single merge, a single in-file credit solution. So lots of changes coming, which will create opportunity. Speaking of Powell, I thought it was interesting that Powell has gone full Doge and taken an Elon Musk page out of the book, and he is having his inspector general look into the $2.4 billion spend on the 2 buildings that they own. Now, remember, the Fed is an independent entity. They are not controlled by the government at all. So even though the president is tweeting and talking about it, and it's creating, some kerfuffle, if you will, and putting pressure on the Fed in different ways to try and get what they want, which is for them to cut rates. I think it's probably too soon to cut rates until September, but I think if the data, in this month for CPI and then PCE, and then we get another month's data, and then we'll get some more data in September before the September meeting where they have a dot plot, I think it'll be time to at least cut 25 basis points and show that we're back on track. The Fed balance sheet's on pace to get under $6 trillion. And, we were talking about it one time being at $9 trillion. And so there's less liquidity in the world. There's less dollar-denominated instruments for countries to do business. Gold is ripping. Bitcoin is ripping. $1.2 billion rolled into institutional money. $1.2 billion last Thursday rolled into Bitcoin. I think BlackRock has an ETF at like 90 billion, and it's one of the largest ones out there, certainly top 6. So institutional money is believing in it, and when Bitcoin rips, it's usually a sign that the stock market, at least the Nasdaq, is going to rip as well. And why wouldn't it? How do tariffs impact, your Netflix or data centers or the AI race or all this capital expenditure, CapEx, that's being spent to build data centers and build all this crazy stuff? Grok 4 was released and is touting itself as the best coder in the world. There's some pretty great stuff you can do with a lot of the large language models. Saw a demo of AILO from Poly today with some of the large language model stuff they have going on. There's just a lot going on, and that change in our business, is creating opportunity. So Powell going full Doge I thought was interesting, looking into the $2.4 billion. I don't think he should resign. That would validate the fact that there is not an independence or there is pressure that we put on by the president. So we'll keep an eye on all that stuff. Jobless claims last week is kind of a early bellwether sign of whether the labor market is weakening or not. Fell to 227,000 weekly jobless claims. Still pretty elevated, below the 235,000 number. But I'll be looking in September for the quarterly rebalancing of the jobs report, QCEW. Look it up. I did some research there. Pretty interesting to hear, the birth-death ratio and the modeling that goes into jobs reports. We know the trend is for jobs to be lost. And remember, those 818,000 jobs were rebalanced last year, and that's a lot of jobs. So these monthly reports that come out that look stronger than they are, then they get cut back. But, the market's already, sold off, or rates got worse, and then now we've come back down. And we're at a much lower level than a 5% 10-year Treasury, and the 2-year Treasury is under 4%. Of course, those things could move tomorrow and fly in the face of what I'm saying today. But in the long term, when that September QCEW comes out, we could see a lot less jobs reported balanced through March. So just through March of this year. So it's a lag factor to have the states report back to the Bureau of Labor Statistics on this quarterly rebalancing. And it's the only offset they have for kind of their made-up number for the birth-death ratio. Now, birth-death ratio means birth, the creation of new businesses, and death, business closures. And it's hard to gauge that. If a new company is out and creates jobs, they may not show up in the survey for the businesses. If a business doesn't report in the survey, does that mean they're closed? Maybe not. It could simply not be reporting. So they have to make an estimate and guesstimate. And what's interesting is the guesstimate for that birth-death ratio has always been to add more jobs to all these jobs reports, where when the QCEW comes back from the states, it's way less. And I think that trend of softening is going to continue if we're trying to test the future. Okay, gold's share of global reserves, official reserves, has surged to 20% at the end of the year 2024. And so dollar assets is still 46% of the world's assets. So still doing good there. In earnings season, analyst estimates about 5% growth. So any kind of beats from all these companies that are about to report for the second quarter. So, April, May, and June, any beats of estimates to the upside would continue to fuel a stock market rally, but also the guidance they give is super important. Okay, we've had another quarter of actual tariffs in place. What does that mean? What do these businesses think? Are they going to tell us it's not a big deal, or we're able to swallow it? I find it interesting that a lot of corporations, in the past administration, billionaires, got to pay their fair share, and we're going to go after the taxes, and every single Democrat in the One Big Beautiful Bill wanted to raise our taxes by $4 trillion. But the irony is that tariffs are taxing businesses, and large businesses are eating that, which means they're squeezing out smaller businesses, which could be a business closure. 55% of jobs in America are created by small business. And so some of these large corporations are eating it on the bottom line, and thus putting money in Treasury's coffers, which in June, they had a surplus at the Treasury, largely due to tariffs. So there's a tax on consumption that's hitting the bottom line of corporations, and it hasn't shown up yet in the consumer data. Only 11% of our goods are even imported, and not everything comes from, a high tariff rate country. So, And again, like I said a million times, I don't think consumers have a gun to their head. NVIDIA just crossed the $4 trillion market cap. NVIDIA is soaring, and they have like a 2-year back order on their semiconductor chips. Business is booming. Seems to be in a good spot. This is what a soft landing looks like. No recession. So we'll keep things going, and I'll have a video update of our Culver City project that should be done within the next 60 days. And then I'm going to go take off. So I will not be here Thursday, Friday. I'm going to even have my phone shut down. So have a wonderful week. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.